brand new week, and you know exactly what that means. That means we are adding new funds to the portfolio challenge. Every single week, we add 1% of the value of the portfolio with fresh aliquot of cash. New money going in to keep the compounding on top of itself. And if it was not for HBAR and Saucer Swap, we would not be adding as much money today, specifically because some phenomenal news just came out for both of these coins. Well, not both of them necessarily. Really, it's just HBAR. Cash. Money going in to keep the you shut your mouth over there, huh? Let's look at it. I should have pulled it up. I should have been excited already. I should have already been ready to go with it. Enough of that pawn stuff. Breaking. HBAR plus Federal Reserve. Fed now has added another company to its service provider showcase. Micropayment company DropCC, which enable micropayments for HBAR USD and USDC, which is massive. I wasn't expecting this in the slightest, and I think it warrants looking into all of it a lot further because it's a little bit confusing considering the fact that they continuously say that FedNow has nothing to do with crypto, and then they make an adoption like this. Nonetheless, love it or hate it, HBAR is pumping off the back of this news. Look at this single candle here. This one candle is up 15% off of this news, which is huge. That's phenomenal. We got my Saucer Swap portfolio up here. It's really just, I got a little bit of sauce here. We're up 52% on it, which is not bad in the slightest. I just wish that there was more money to have been put into this. But it's such a risky play. Honestly, 5% of the portfolio is a pretty large amount to have in something as risky as Saucer Swap. Let's get into trading. Let's get into live trading. Happy Monday. How are you guys doing? There was a long weekend, guys. I was out there renovating the condo with my girlfriend. We thought we would be able to demo part of the kitchen, like remove part of the cabinets, cut a hole in the wall to make it an open concept from the kitchen to the living room, plaster it, wait for the plaster to dry, sand the entire apartment, prep every single item that's in there because we've started moving in already, so there's random items laying around the condo, and then rent a spray gun and paint the whole thing in a weekend. And after we did the demo to open up the kitchen into the living room, we were like, yo, we are not gonna be able to do this in the slightest. What's good, Johnny? What's good? So I'll probably go at some point during this week and finish sanding off that plaster and replaster it because I'm sure there's gonna be little cracks and dings and stuff. But I was sharing videos of the entire process, so I got a lot of good feedback from you guys. You guys seem to love the home renovation stuff, which I do too. I'm hoping this is going to be really good for her. I'm putting in like free labor for her for this condo, and she's helping me a lot with stuff. So I don't want to say it's like free labor. It's like a little swap. I'm trading my knowledge on how to do renovations and my labor for her allowing me to live in her condo because my name's not on it in the slightest. If I don't have W-2 income, so I would actually just hurt the whole process of getting it. But that's a whole different discussion. She got the place for $229,900, and the exact same unit sold a month prior for $290. So there's a good chunk of change in there to potentially be made. And I think so far we've only spent probably like $2,000 or $3,000 on the renovations. Enough of that. Let's look at trading. We were talking about HBAR potentially bouncing here. It bounced a lot higher than the support line, right? We didn't come straight down, but that's because fundamentals took over in spite of the technicals, which is why you can't invest based off of technicals. You have to invest off of fundamentals because you never know what's going to happen, right? Let's go to Bitcoin, get a feel for what direction the market is going in. Overall, it's the same nonsense that we've been seeing time and time again. If you look, however, we'll go a little bit more in depth since I understand a lot of times I'll skim right over things because they make sense to me, but I don't explain why they make sense to me. We're starting to see a little bit of support on Bitcoin on the daily time frame. Just have hands full. You're good. Thank you, Dream. I appreciate you. I appreciate it. You can see like we spiked up on Bitcoin and then we started coming back down. We talked about this when it was happening. The fact that this one giant green candle was followed up immediately after with this giant red candle coming straight back down showed me that there was not a lot of velocity. The RSI was not going to continue to pick up and have us go to all-time highs. We slowly started to bleed, and we were saying that it looks like we're just going to continue bleeding. And today's daily candle opened and went straight down, which is a bad sign, but like I said, every single candle is a war happening between buyers and sellers. They're trying to argue about what the price of Bitcoin or whatever asset should be. In this case, we immediately saw a dump in the morning, and then the buyers stepped up to the plate and bid it right back up. And so right now, seeing this candle where there's giant wicks and a small body, I call that a Doja Cat candle. Rather than just a doji, it's a Doja Cat candle. Those candles are signs of a reversal. Those candles are signs of an area of congestion, which it 100% is, right? It's been like this for a month at this point. How many days is that? How many candles of this have we had? Yeah, 20 candles like that. So this area, there is a massive war happening. A lot of people want the price to go lower. A lot of people want the price to go higher. And that's to be expected considering it's been like that every time we've come to this $30,000 range. Even back here, we had a huge Doja Cat candle. Look at that. Look at how big of a wick that is. A single wick. 13%. That's insane. That is insane. Those are massive wicks. And it's because there was a war happening. And then we fast forward a year and a half, 2 years, or however long it's been. Should have zoomed out. And there's another war happening, just a lot smaller, a lot less volatile. Now, closer, you guys are here to day trade. I get it. We just want to see the direction. My point in saying that is that people are stepping up to the line. And you can see we had the dump in the morning, like I said, based off that one wick. And then we came right back up. Now we're starting to bleed a little bit. This is not the pattern that we like to trade. We are not respecting the VWAP. It's slicing straight through it. So there is no clear direction for me personally on the intraday chart for Bitcoins here. So we're going to take a look and see what the market has for us across an array of coins. Ethereum, same thing. Bitcoin, nope. ADA, not respecting it. Matic, Sol, HBAR. HBAR is respecting it, and it's holding up very, very strong. HBAR is holding up very strong. I expected it to have some level of bleeding. It's not. It's not at all. XRP had a little pump with HBAR, I think just because people associate them together. And then the market realized, oh, this actually has nothing to do with XRP. So that would have been a good trade. When you see news happen, like when the Aptos news happened the other day, when it was partnered with Microsoft, and it spiked up like this, Sui also spiked up like that, but Sui had nothing to do with it, so that was a good shorting opportunity for Sui, you know? Because it has literally nothing to do with it, so the reason why it's spiking makes no sense, but... So we might trade HBAR, XRP, no, Aptos, no. So there was a clear change in direction that happened a minute ago. The only one that looks potential to trade is HBAR. So we got to be careful with HBAR, but I think this is a solid one to be trading here today. You can even see like we're in a channel right now as well. So not only is it respecting the VWAP, but we're also in a channel, and it's been respecting it all day. So if we come down here, I would like to take a long back up to probably just here. So 2%. There's potential for 2% gains here. That's solid. That's really solid. That's all we need. That is the only thing we need. We're going to take a look at the news as well. I just want to show you guys some compound interest power. Okay? Starting with $100. No additional. Years to grow is confusing when I do these compounds because we're going to do the daily compounds. Someone had actually sent me a link to a daily compound interest calculator. Why don't we do that? Why don't we do that? Daily compound interest calculator. $100. Okay, 99, sure. Initial interest rate. If we get the 1% goal daily and we're using the 10x leverage, that's 10% daily, right? We aren't going to take a trade every single day. So if we say we have 2 successful 10% every single week, all right? Say we take 4 trades, 1's a loss, 3 are winners. These 2 wipe each other out. Then we have 1 left, right? That's kind of how I got to that. 2 a week. We do it for 52 weeks. That's 100 successful days of 10% gains. At the end, we would be millionaires. That's how powerful compound interest is. It shows you that's not how it's going to work, right? And we're also not going to trade with the whole portfolio balance. When it gets up to $3,000, when it gets up to $70,000, we will not be trading with the whole balance. But it shows you the power. It shows you the power. Plus, it's fun messing around with compound interest, because what if you did? What if it did do that? You'd have to be wildly successful with it. But some people can pull it off. Some people pull it off. So far in our farm here, the Saucer Swap farm, we've gotten 20 sauce token and 0.2 HBAR. So they're adding up. They're adding up pretty quickly, actually. Especially if we assume sauce gets somewhere close to $1. We gained $20 from this. Not bad, not bad. This is nothing new. We're talking about what's hot in the crypto market right now. For news is Base is permissionless, says Coinbase Jesse Pollock. Base is Coinbase's new platform here. PayPal launches a new cryptocurrency. We know that. Cardano approaches 30 cents. That's not really cool news. Donald Trump, long skeptical of crypto, holds up to 500,000 in Ethereum. Yeah, because he's not stupid. You can be skeptical of stuff, but I doubt he even knows that he's holding that much. Actually, no. He launched his NFT project. That's probably just some of the profits he made from it. Sauce is a part of HBAR. Yes, sir, Dream. Yes, sir. Sauce is the leading decentralized exchange for HBAR. It's one of like 5 or 6 exchanges. You should check out the classroom we did on it. It's listed in the Discord. Oh, my girlfriend's watching soccer out there. I just heard her scream a little. Let's see what's rising. Cardano, Whales, PayPal, Cardano, Scenario. Replaced by SEC's Crypto Mom. Oh, okay. Okay. Trump trading cards were Polygon. Okay, so assuming then he also owns some Polygon Matic. And I bet he owns Bitcoin. I guarantee you his financial person is like, bruh, you got like $100 million here. Let's diversify some of it. Let's take 0.5% and put it into some speculative crypto assets. Really, that's what it, you know? If he's got 500,000 in Ethereum, what is Trump's net worth? Jesus, why was I so far off? Okay, do you see that? He's got $2.5 billion net worth, right? So, for him, rather than do the mental math, my brain's not mathing correctly right now. 2.5 billion. If he puts $500,000 into something, divided by his entire net worth, you're looking at 0.02% of his net worth in something. So he's got his whole portfolio, his entire investing portfolio, and he's like, his financial advisor's like, let's put 0.02% into something speculative like Ethereum. And then the entire Ethereum world is like, oh my god, Donald Trump is long Ethereum. He's got a massive portfolio of Ethereum. Put in perspective. The US has 756 billionaires. That is kind of shocking. There's a lot of money out there. There's a lot of money out there. They got tens of thousands of millionaires. Okay. I'm curious in the world. 3,200 billionaires in the world. It's funny to me because, okay, somebody had an argument with me on TikTok the other day in a comment section. They said there is no possible way to ethically get $1 billion in 3 lifetimes. And I was so just absolutely floored with their lack of understanding of any of this game. Any of this game. Like, I don't have to explain it to you guys, but I'm going to explain it anyways, okay? That is like the most asinine comment I've ever heard someone say. Let's say you start with $100. Well, 1,000. I don't want to be too insane, okay? Let's say you're reasonable, you're smart, and you add $1,200. No, you don't add anything. How long is an average lifespan? 73.5 years. So 73. Is that like 220 years? 224 or something like that? Alright, stop being fancy, dude. Just do the math. He said 3 lifetimes. Yeah, 219. 219 years. The S&P 500, an index fund investing just in the stock market, the broader stock market. You could even lower it, right? Let's do the whole global stock market. You invest in a broad-based global stock market ETF or index fund. They average about 6.5% a year. Over the last like 150, 200 years, that's what they've averaged. Okay, so you start with $1,000 and you have 3 lifetimes like this person said. You're compounding monthly though. 100,000 million billion. At the end of 3 lifetimes, you have $1.5 billion just off a $1,000 investment. It's the power of compounding. That person, I like tried to explain this to them, but they were just so like thick in the head, they couldn't wrap their head around what I was trying to say to them. You don't need to be unethical. All you need is time. This right here is just inflation, okay? This is asset price inflation, which is going to trickle down to the rest of inflation. At some point in time, this will be nothing. A billionaire will be even less than what a millionaire is right now to us. And a millionaire is nothing compared to what it was 20 years ago. It's insane. Dude on doubling up. Yeah, how many times you need to double something to get there? It's insane. Like, I remember a video that I put out in 2020 complaining about inflation. If you extrapolate out, okay, in using a Big Mac index, the inflation rate from the 1970s until 2020, so 50 years of inflation, you go from having a Big Mac that was like 25 cents to a Big Mac that was $5. If you were to extrapolate, or it was 50 cents to $5. If you extrapolate that out another 50 years, a Big Mac will be worth $50. Just going to go get a Big Mac from McDonald's, which will be the cheapest way that you can go get lunch, dinner, whatever, will be $50. That is like the goal. That's what's going to happen. That's not like me fear-mongering. That's not me saying the dollar goes to shit. That's normal inflation. That's not hyperinflation. That's not the dollar gets destroyed over the next 50 years. That's just like if everything goes perfectly, if everything goes really nicely, a Big Mac will be worth $50 in 50 years from now. And 50 years sounds like an insane amount of time away, but like it's not. It's not. That's specifically for me, that's my retirement age, right? That's when I should be retiring. You're somewhere around then. It's like the median income when I did the math out, it's at 50,000 right now, give or take. I think it's 65,000. The median income will be $250,000 a year at that point. $250,000 a year will just be average, like barely getting by. So being a millionaire is not going to mean shit. In 50 years, a millionaire is going to be like, oh, you make $1 million a year? That's awesome. That's good for you. You're doing well for yourself. Yes, exactly. Dream, I want you to dig. I'm actually gonna take and run with that. I'm gonna wait here for a reversal. Okay. I'm actively, just so that you don't forget that I'm watching H bar right now. Okay. I'm actively waiting for a little bit of a reversal. I'm gonna pull up a 5-minute chart here and just see what it looks like. The 5-minute chart kind of looks like we're starting to see a little bit of a reversal. I want to see some more confirmation here of a reversal. Maybe we dip down to here, but I want to enter into H bar on a leverage trade here. But I am going to dig deeper into what you just said there, because the inflation that we just experienced is part of the plan. They had to do that. When you print off the money, the way that the United States creates money is by issuing debt. So they have to pay that debt back, but they know that they can do it at a future date. And if they inflate away the price of everything, then the loans that they're taking out right now, the debt that they're issuing right now, becomes easier and easier to pay. So that is part of it. Yes. When you hold debt, inflation helps you, as long as it's good debt on income producing assets, which is what the United States does. They issue bonds and everything, right? And that's just one way that they go about it. But how much debt did the US issue in WW2? Okay, so World War II. So this was over 6 years. By the end of the war, the debt had reached $285 billion. That's not how much they issued, though. That's how much they had in total. Okay, so they issued $200 billion worth of debt, okay, to fund the entire World War II. You see right here, we went from 51 billion to 260 billion. That's insane. That's a massive amount of debt as a function of what you had initially in a short period of time to triple up or quadruple up the debt or whatever that is. That's nuts. But if you look at it just at face value, $209 billion was added. How much? So far, we've given $75 billion to Ukraine in a small war that we're not even associated with, and they just requested another $40 billion to go over there, so that would bring it up to over $100 billion. So in that time span, in that 80-year time span, inflation has done that. Inflation made it so that you could fund an entire world war for 5 years, 6 years, off of just twice as much as what it costs the US to fund Ukraine's war when we're not even a part of it. You know? That is the power of inflation. That is the loans and everything that's happening. That's debt. They know it just becomes increasingly easier to pay off old debt with money down the line. It's an insane tool. Once you understand the financial system, not even to the most high degree possible, but like just to the bare bones, understand how the rich play this game, how the countries play this game, how they use money as a tool to facilitate whatever it is that they want to do. Everything just becomes a lot more clear with how you should play the game, you know? Everything makes so much more sense. If you could pay for a course, right now that would bring you from waiting tables or doing Uber Eats, right, where maybe you make minimum wage at something, forget those because those are variables. You make minimum wage, $8 an hour, whatever state you're in, and you could pay $500 for a course. That would triple your income to like $24 an hour. You could either take out the $500 on a credit card and pay it back with your future earnings, or you could save up for 8 months and then pay for it in full. Those 8 months that you have would be far better spent in debt, right? Take out the debt, spend 8 months working at $24 an hour versus saving up at $8 an hour to pay for it in full because debt's bad. Debt is good. Debt is a tool if you can use it appropriately. The rich know that, but poor do not know that. Poor can't conceptualize that because they've been taught something else. Still trying to figure out how to play the debt. Yeah. It's good debt versus bad debt. You have good debt. Good debt would allow you to increase your earnings. What's good, DYOFR? What's good? Good debt enables you to increase your earnings. It cash flows to some capacity or allows you to quadruple your income, right? You learn a skill that will pay more as long as you actually pursue that skill. That's why people take out tons of debt to go to college, because theoretically you should be able to get paid more and pay that debt off quicker versus going out in the real world and working for 8 years to get to the point where you have the skills. You just take out debt and pay it forward to get over that learning hump. Bad debt is when you load up a credit card just to sustain your lifestyle. You load up a credit card or go get a fancy car because you qualify for the payments. Bad debt could even be, arguably, you go buy a bunch of real estate. You go buy a super expensive condo or house in an area that you realistically shouldn't be able to afford because the bank will give you that loan, you know? That could still be bad debt because it's not cash flowing anything. You're just living in it, but you don't need to be living in that expensive of an area. And then your payments just don't add up. Okay, I'm glad we didn't take this trade. I'm glad we didn't get into H-bar in anticipation of holding support, because on the 5-minute chart for a bit there, it did look like we were going to hold. One of these candles, I think it was this one, had turned into a Doja Cat candle, but we just broke. And this pattern is no longer the same. We got another war happening though. Right now the buyers are not stepping up to the plate. Right now the sellers are overwhelming H-bar. Let's see if anything special is happening with Bitcoin. So Bitcoin got rejected by the VWAP, which could show signs that we're in a change in direction, right? Above the VWAP meant we were going up. Now it's getting rejected, so maybe people are extrapolating out that H-bar is not going to hold this. TMC stock. I'm assuming it's pumping. The metals company. Nice. What news came out for them? Starting to see they get a if this is something that can be sustained, then wonderful for them, because it looks like they've made a higher high, higher low, right? The low, a higher high, because it's higher than that one over here, and then a higher low, because it was higher than this low back here, and then a higher high, because it's higher than the high made here. So if we can hold that and continue on, it looks beautiful. Look up Elf. Samira says, look up Elf. What's up, Samira? Happy to see you here. It's a new name we haven't seen before. Elf Beauty. My God. Holy shit, look at this. Look at this company. Elf Beauty. What price was this back here? $7 back in March of 2020. Holy crap. $132 right now. People think you can't make money in the stock market? Are you joking? Imagine you didn't even time it that good. You just know, right, you're a girl and you invest in the stock market because you're smart and you know what's going on, and you see Elf everywhere, all over Walmart. I think Jeffree Star had done a bunch of YouTube videos about it back here. Let's say you get it right underneath $10 because it's that psychological barrier. Then you hold on to it this whole time because it's your favorite cosmetic brand. Holy shit. 1,300% gains. You look like a G. All you did was buy something you use every single day. You don't have to complicate this shit. God damn, Elf. I made a little bit of money off Elf, but nothing compared to that. I made it back here, I think. I was holding it through this little run up. I thought I did super well. Double up my money real quick. This is why it's dangerous to, like... I'm going on a rant on this one. This is why it's dangerous when you look at stuff and people tell you lock in profits. It depends. You got to know what you're holding, right? You got to know what you're holding, because I remember buying ELF back here for pretty cheap. I remember doubling up my money and getting out of it. If I had held on to that, I would be up so much more in just a couple years. Look at this run up. That's insane. Because I wanted my double up, I took all my money off the table and I walked away with a successful trade. And that's phenomenal. But look at how much money I left on the table with that. Look at how much money. I took 100% gains and sacrificed 1300% gains. You gotta know what you're holding. You gotta know what you're holding. I'm sure a lot of people are gonna go through that with Bitcoin and Ethereum as well here in the short term. You bought it down here. You bought it when everyone was fearful. You're holding it. You're up 100%. You're taking profits and you're walking away just to potentially miss out on it going up to 100,000. You gotta know what you're holding. You gotta know what's going on. Good call out, Samira. That chart just looks so wild. It just looks so insane. I know you guys don't. How many of you guys own stocks? How many of you guys are in the stock market as well as the crypto market? We're seeing a bounce here from the VWAP on HBAR. So I don't know that I'll be able to enter a position during this live stream. Here, we'll adjust this to make it look like we can still get in. Oh, look at that. It's bouncing off support perfectly. I'm gonna attempt to enter this, but I need a solid proof that we are changing directions. Bitcoin mining stocks. Hell yeah. It's like leveraged plays on Bitcoin. It's how institutions, Bitcoin mining stocks are how institutions can get into the space without worrying about the regulation as much. They can get into the picks and shovels rather than the actual gold. Because the gold is being regulated, but the picks and shovels are not necessarily getting regulated. They're still getting regulated, but it's not the same. You can hold them without the fear because you're only buying a stock, and if the stock goes to zero, like the stock gets wiped out, you don't have any legal issues with what you did. But if you hold Bitcoin and Bitcoin gets hit with a bunch of you get in trouble for having held Bitcoin, then your company gets destroyed. But if you hold just mining stock, does that make sense? Hopefully. Even though you're holding a derivative, in some way, it is safer than holding the actual thing for companies, for institutions. But same with Coinbase, same with Coin. The picks and shovels, whatever is there to help create the infrastructure for crypto to do well, for crypto to succeed, is going to do very, very well. Coin is bleeding aggressively here. I wouldn't buy it yet. It looks like you're buying something that's about to have a huge spike down. But on that spike down, which will probably go down to $64, $65, I think I'm going to pick up some Coin. Down here, it was like the company was valued as if it was going to go bankrupt. Insane. Up here, insiders were starting to sell some of their shares. Over $100, I remember seeing that insiders at the company were starting to sell. And I think this is evidence of that. Fisher transformation indicator shows direction confirmation for me for Bitcoin mining stocks. Which ones? Riot? Or just in general? Yeah, all of this. This is a clear as day stepping stone. Clear as day. It's following Bitcoin perfectly. So the miners, or the people holding miner stocks, are anticipating a sell-off for Bitcoin. You can see that pretty clearly. They're trying to align again. See that? All right, we're finding support here. I'm going to enter into this trade and then go about my day here. So H-bar, I'll probably get in around here. I'm going to put my stop loss I think down here. A little bit lower, because I don't want to get wicked out on this if we are to continue, but I also, if we don't hold this as good news, right, if we continue to come down, I don't want to ride this back down after this pump. So I'm thinking I'm going to put my stop loss here at 6.34 cents and my take profits up here at 6.6 cents. So if I can get in down here at the VWAP, that'd be a nice risk to reward. I don't think I'll be able to. So that's potentially 2% gains, risking about 1.5%. HUT. Let's check out HUT. Then we'll come back and see if the setup's better. And then I got to go on my day. HUT is falling off a cliff right now. Yeah, HUT is falling off a cliff. I wouldn't touch any of these right now. In a short term, short horizon, just looking at the chart, you gotta find some level of support starting to happen. These look like they're falling off a cliff. Maybe it finds support here. This would be an area to pay attention to. For a long-term play, yeah, like looking out over the course of the next bull market, these things at $2.70, this is probably gonna make higher highs. So from $3 to $16, you're making bank. 100% you're making bank. But you might have to suffer through coming down to like $1.50 or something in the midterm, which would be a 40%, 30 to 40% correction. So it just depends on your horizon. If you own none and you're biting at the bit, then yeah, open a little bit of position. Put like 10% of the cash that you want into it. But don't go balls deep. Do a few buy orders, if that makes sense. Clean Spark did good. I don't usually trade random companies. Oh, this has got to be crypto related too. I haven't heard of this before. It was a pretty solid week. Usually, like, when I'm in the stock market, I'm very much just my bread and butter plays that I really like usually larger tech plays. These are starting to slow down though, so I might be weary of taking profits on some of this stuff. These are just some of the companies that I'm a fan of. Those four specifically are the ones that made up a lot of my portfolio. Not Nvidia. Look at how beautiful that is. Yeah, that's time for taking profits. That's a big correction coming. What else? What else is there? And Nvidia. Absolutely, Johnny. I made a shit ton of money on Nvidia. I think buying it down here, I believe my average cost was like very low, very low. I mean, it's dead now. But I ended up timing this very well. Like, I think I got in somewhere around $15 and sold, I believe, at $49, which was beautiful for me. That was a beautiful run up, and I timed it very well. I was waiting to see if we could have a fundamental shift to buy back in. I don't think this is a good genetic analysis play anymore. I'd probably stick to something like CRISPR. Yeah. There was one other that I can't remember, but it's been a minute since I've really looked into the companies, and investing is not something you can do based off just charts alone, right? We know that. So you have to take the time to like go through the annual reports if you're going to be investing in any kind of stocks. I wish crypto had quarterly earnings and annual reports and stuff like that. But yeah, I'm going to get into HBAR unless HBAR takes off here. My goal is for it to have a little bit of a pullback back down, and I'll get in and then take some profits. But I gotta go get ready for the day. There's one gene editing play today. Which one is that? DYOFR? Which one? The reason why I liked Nvidia more than more than CRISPR was because CRISPR was doing the actual editing. Nvidia was just sequencing. I wanted gene sequencing plays, not gene editing plays, because the gene sequencing is going to be everywhere. Everywhere. TSHA. I gotta look into it. Oh, it's pumping today. It had its earnings right here, so it must have been extremely good earnings. This is a super small play. Definitely very speculative. If you look at that chart, you can see clear as day the market is not in favor of this play. But then they had a breakthrough earnings. They had great earnings apparently. So maybe something to look into. Maybe the market's mispricing it drastically. I haven't heard of this one before. You gotta be careful with those plays though, because their earnings calls, everything about those plays are very confusing unless you've been in the space at all. Unless you're familiar with gene editing, those things can get very confusing and you can get sold on the hype easily because their job is to sell you on them as an investment, right? And so if you just look at the graphics that they present to you, you might fall for something that really is garbage because the technology is not that useful. All right. I want to see how many people are actually chilling here watching with us. Let's go. Let's go. Your time is your most valuable asset. Hopefully, you found this worth investing into. I'm going to enter H bar here in a second, but I got to get going.